Question number 8 is written as vehicle X was purchased for 80,000. It had a useful life of 5 years and was expected to be sold for 5,000 at the end of its useful life. Then it is written vehicles are depreciated using the straight line method. We can do this. Subtract this residual value of 5,000 from the purchase price of 80,000 and divide the remaining amount by the 5 years, the lifetime. So for the straight line method, its annual depreciation is calculated as 15,000. Then it is written vehicle X is replaced by vehicle Y after 3 years of use. Since vehicle X has been replaced, we calculate its net book value after 3 years of use. Its depreciation for 3 years comes to 45,000. Now subtract this depreciation of 45,000 from its purchase price of 80,000. The net book value comes 35,000. This means that at the time of replacement, its value should be considered as 35,000. Got the point? Then it is written the cost of vehicle Y is partly settled by the part exchange value of 20,000 of vehicle X. This means that the buyer valued vehicle X at 20,000 instead of 35,000, meaning a loss of 15,000 is currently visible, right? Then it is written what is the loss on disposal of vehicle X. And luckily, we have already calculated this and we find it written in option B. So the correct option is option B. I just hope you understand.